I'm particularly pleased to be here. It really gives me great pleasure. This is my first time in Lithuania, the country where my ancestors immigrated to the United States from. I hope to come back, maybe on vacation, but certainly to come back. I'll be able to come back for work if this presentation goes well. So let's all try and do that. So I'm a little hemmed in here because the clicker's not working. But just what I want to start with is a little bit, just a quick couple of words on SelectUSA as our national investment promotion agency in the United States. So every country has what we call an IPA, which is not to be confused with an India Pale Ale, which is a popular beer in much of the world. But this is the way at the national level that we promote and position the United States for business. And as Sean mentioned, the U.S. hasn't been in this game for a long time. It's a relatively short period of time. And it's all about national competitiveness. So we know and are very confident in our strengths and our attributes, some of which I'll cover today, but historically had not done a very good job about talking about them and projecting them globally. Created by executive authority of the President in the U.S. means something, so that President Obama, although he probably didn't realize it at the time, created us in 2011. Since then has been actively talking about SelectUSA and the United States in terms of global investment. Foreign investment, global investment, domestic investment. SelectUSA is now something, and FDI attraction is now something that the United States of America takes seriously, and it's part of the daily life. So it's not just policy in the government, but it's about promotion. And it's not just about encouraging companies to come, but their happiness and contentedness after they're in the United States. And there are many agencies of the federal government working on this issue, not just the Department of Commerce, but for sure the Department of State around the world. But it gives us access and engagement with many government agencies. In fact, all 26 government departments and agencies in the U.S. that touch on issues of business investment. And the reason that people care about this, the reason that our country wants to care about this, has to care about this, they're all kind of positive reasons. A few of them up on the screen has to do with issues of U.S. competitiveness. So that's the job creation, there's the exports, there's the wages paid and R&D. Because we know as a country we're stronger because of all the companies in our country, not just homegrown U.S.-born companies, but companies from around the world. And for me, in terms of this presentation, when I say investment or FDI, I'm talking about companies taking positions in U.S. companies of a 10% or greater controlling interest. So a controlling interest in a U.S. company. There are all kinds of investment, from real estate to passive portfolio investing. I'm focusing on direct investment. When a company comes to the U.S. to expand what they're already doing or to acquire a piece of or all of a U.S. company. You see historically here on the screen, we do pretty well in this regard in terms of attracting capital. There's a few slides where that I'll show where there's really U.S. as number one, and then number two is fairly distant in this case. Hong Kong, which recently just overtook the UK as the number two. I'm not afraid to be honest in my presentations. And I think what's important to point out is since the 1980s, our share of investment has declined. There's all kinds of good reasons for that. Rise of democracy around the world, greater market openness and access, rise of communications infrastructure. Those factors have really made it a situation globally where companies could go many places depending on the industry sector. So more geographic neutrality in terms of where you can locate a business, and more of greater opportunity to analyze opportunities in other markets that you wouldn't have traditionally gone in. But the end result is that our share of global FDI has fallen, and we want to do something about that. So historically, you see our top 15 investors. So it's basically Japan, Canada, Australia, Mexico, and West European countries. On a growth basis, you see, and if you haven't already, everyone can have a copy of this. I see you all are writing very intently, very feverishly. So don't feel like you need to do that. Feel like you can just relax and take this all in, and we can send it out electronically. So these are our top 15 on a growth basis. So real diversity in terms of where the capital's flowing from. There's a really interesting story. It's part of that story I was just talking about. One of the reasons why our global share has declined since the 80s is exactly what's going on in terms of why the flows are so diverse in terms of where investments coming from to the United States. So very interesting story there. By industry on a stock basis, so on a historic basis, we're very strong in manufacturing, but not just manufacturing. There's a lot of talk about how the U.S. is really a services economy, and I can't argue with that. Oh, thank you. I can't argue with that, but we have substantial flow in terms of manufacturing investments as well. And then very strong in terms of finance, insurance, real estate, and general trade, and as well retail. If we look at the growth on a compound annual growth rate basis, and this has changed over the last few years. You see that top line, petroleum refining and extraction, really defines a lot what's happening in the U.S. economy of late. And 7 or 8 years ago, when I started giving these kind of presentations, which have evolved themselves over time, we weren't talking about so much growth in our energy sector. And it's important not that you all are energy producing companies here. That's not what the story is telling you. But part of the story is the energy intensive industries that are in the United States taking advantage of what's happening in U.S. energy. And of course, on the top there, it's really all about oil and gas. There's so much more to the energy story, which I'll get to in a little bit later. But this manufacturing growth, sometimes I would make an executive decision to remove a negative sector. But I think it's important here. This says information. I don't know if you can read that. Information includes newspapers. And that's actually a really interesting fact that's taking place not just in the US but around the world, in much of the world, in terms of the decline of traditional news media. And then there are corresponding growths in other parts of the economy. So specifically in manufacturing, some breakdown. If I look at this list, I see companies that we've been working with just this year and last year on the energy intensive industries at the top of this list. So that's not just shale gas, for instance, but on fertilizer and chemicals and aluminum, but including one very large bakery that we worked with, some grains, business to business, some dairy manufacturers in the United States, a number of IT services, biotech companies, one apparel company, and it's really, I haven't taken this much time to stare at this list in a while, but there's quite a diversity of industry sectors that are currently experiencing growth in the US market, currently experiencing inbound investment. And oftentimes this can be a situation where companies have not been coming into the US market in these industries. And so we don't have experience working with that specific industry, and so we're taking the time to learn all about the investment environment from the company's perspective and helping to handhold the company in through the process. A little bit more about that later, there is such an explosive growth with regard to a variety of sectors, and this is just it's kind of a case in point. Again, what we call finance, insurance, real estate, experiencing substantial growth, and then again, you'll have this, but emphasis on technology and information technology and biotech services, and on the research development side. So these slides here are just a tremendous amount happening in sectors that matter globally, matter to the U.S. of course, but matter to you in this room. Unfortunately, not a tremendous amount of investment flowing from Lithuania to the United States. This is something that we seek to change over time. Lithuania won't have a similar position to the UK, just given the size of its population and economy. But there are starting to be some companies not just exploring opportunities, but taking investment decisions in the US from Lithuania, which is excellent, excellent news. And it's not excellent news just for us, of course. It's great news for Lithuania, because it's truly a win-win situation. When a company invests in the largest market in the world, then they're typically going to be benefiting from new technologies, new management techniques, new research and development, all kinds of business linkages that will ultimately expand the trade and investment relationship between those two countries. So the US and Lithuanian bilateral economic relationship will benefit from increased investment from Lithuania to the US, and of course from the US to Lithuania. And there are all kinds of reasons why companies are taking this decision. So one of the recent ones that came out, A.T. Kearney's 2013 FDI Confidence Index, the US had been had not been #1 since 2001. So it was 12 years China was #1 and the US was #2. This is a poll of C-level executives in a variety of industries around the world in terms of their confidence for markets, in terms of where they would allocate capital. The US does very well across a number of indices and indicators. And there are a number of reasons for that. I think if we look at the services space, and from what I understand that a number of you have an interest in, intellectual property rights protections, a generally transparent and predictable operating environment. This is important from a business planning perspective. So no matter what the industry is, no matter what the sector is, you have an expectation of ease of doing business, ease of operation. From an innovation and entrepreneurship perspective, there's no parallel to what the United States affords companies. That nexus between, industry clusters, so competitors and things going on in your industry sector, but also talent, so labor, but also capital, and also research and development. One of the things that the US affords companies is national treatment. So any company that establishes itself in the United States is then treated as a US company. We're the only country in the world that does that, and this is important. So this is not just from an operational perspective, but this is a philosophical perspective, that when a Lithuanian company sets up shop in America, it is treated exactly like US companies, including for government services like what our colleagues can do to promote exports, or Export-Import Bank of the United States, or political risk insurance, whatever the government resource is. That's a very important point. But So I was going to tell some stories, but I'll save it. On innovation and entrepreneurship, we have a reputation that sometimes is limited to maybe Silicon Valley or maybe the Harvard, MIT, Boston area. And the fact is that there are so many clusters around the United States in a multitude of industry sectors, and really virtually every industry sector. And so there is something for every company, something for everyone, and it's not just kind of a platitude, a gratuitous comment. It's really truth that companies are coming to the U.S. Not just to establish an expansion, but oftentimes to establish the company itself, to commercialize that technology, because it might be harder to establish a company in their home market. In terms of labor productivity, it's, I think, one of those situations where there's such a gap between the U.S. and the next. So it might be a little hard for you to see back there, but on the lower right, that's talking about labor productivity. And labor productivity in the last 5 years has only increased for the U.S. The gap is broadening. During the Great Recession, as we refer to it in the U.S., how do you refer to that here? The recession that we just had? The same thing? The Great Recession? Yeah. Labor productivity only increased in the U.S. throughout the recession. No greater motivator, of course, during a recession than not losing your job. But total unemployment in the United States did remain, I'd say, relatively low. It was unacceptably high for sure, but globally relatively low. And not just labor productivity, but labor mobility and labor flexibility in the United States make for a wonderful mix for hiring talent, so that companies know they can really attract and retain the services of employees and staff on an at-will basis, that it is very easy to hire and correspondingly and typically very easy to fire. And I'm not making, I'm not trying to suggest that it's good to fire people or it's a strong suit for the U.S. But as an employer, as an entrepreneur, it is very important to know that your employees are at-will hires and that you have that flexibility that makes it really easy to not just plan, but to execute on your plan and to do it quickly, or to adjust your plan. Again, not the nicest from the perspective of the employee necessarily. We've all been there. But from the manager's perspective, it is really vital to know that you have that flexibility. So another important attribute of the U.S. market is our free trade and bilateral investment treaty infrastructure with the world. So we have a population of about 320 million, which more than doubles through our FTAs, our free trade agreements. Companies invest in the United States from around the world not just to service the domestic market with products or services, but to export. And some companies export 100% of their production. That's unusual. But we worked with a European infant formula manufacturer a couple of years ago that exports 100% of its production to the Chinese market, because made in the United States means something to the Chinese consumer, particularly in infant formula, a very sensitive consumer product category. But companies regularly export out of the United States. This is important. So in Lithuania, when companies are coming in, they're going to typically service the domestic market and export because of the relative size. Well, with 320 million people, it's not necessarily the case in the U.S., but the point is that it happens on a routine basis because it is so easy to do so. and companies can leverage our FTAs and bilateral investment treaties. Yes, it's also a very exciting time because we're in the midst of embarking on negotiations for not just one, but two mega regional trade agreements, which will could, if enacted, drastically and positively change that environment. So that national treatment policy or operating framework or philosophy, but it's law, I don't mean to make it kind of fluffy, it is law in the United States, extends to R&D, public sector R&D. So something like 30% of 35% of all the world's R&D happens in the United States. You can see up on the screen, it's not just technology or biotech as you might think from media. And biotech and IT are very strong sectors for growth in the United States, but it's quite diversified R&D in the United States. Global companies, so foreign companies establishing that entity in the United States, can avail themselves of public research and development dollars. This is, again, unusual. This is a very good thing. This is, if nothing else, this is part of the welcome mat to the United States, that we really want the best and brightest in terms of ideas, in terms of entrepreneurs, in terms of companies, because we know from our experience that one or two people starting out a company in their garage or in their basement or in temporary office space can become a billion-dollar company. It doesn't happen any place more often than it happens in the United States because of all those positives. So in the midst of all of this, and during the Great Recession, started the US manufacturing resurgence. Hundreds of thousands of manufacturing jobs created, or in some cases what we call reshored to the United States, coming particularly from cheap markets in Asia, particularly China, back to the United States. So things were really changing. And one of the factors that play had to do with labor cost. The US is a continental country with great great internal differences in terms of cost of production, input costs, no matter what you're producing. And so, although it might be expensive in one market, it might be inexpensive for you as an employer or producer in another market. And as costs have risen, particularly in coastal China and East Asia, there's been a lot of notice about the relative benefits about locating in the United States from a labor standpoint. Other input costs, and there is no more important and costly input than energy for energy-intensive industries, have lowered as well or stayed constant as they've risen in other parts of the world. Energy has definitely been one of the principal drivers for US national economic competitiveness over the last 5 years, as the situation has changed radically. So if you just read that from a manufacturing standpoint, manufacturing costs are significantly cheaper than other developed economies and making us in line from a competitive standpoint with even developing economies. We have a tremendous infrastructure within the United States geared to help companies from around the world take advantage of this. From our supply chain scouting and advisory services in an arm of the US Department of Commerce called our Manufacturing Extension Partnership, to SelectUSA, that's me and our team around the world, to a program at the Department of Energy, Industrial Technologies Program, that exists just to make businesses more energy efficient. We have significant strengths from a structural perspective in terms of information and communications technology. I think you know this about the United States. It's operationalized each day because so many of the world's top companies are headquartered in the US or have significant presence in the United States. And it's a situation that continues, it gets better, But in this dynamic industry, sort of this macro industry, there's a lot of churn. We know this. Companies come and go, companies are acquired, brands disappear, and in their place, new companies are constantly sprouting. It is a hyper-competitive and sophisticated market in the United States for ICT. It is vital to have a business plan localized for the US market before coming, to be thinking about, to do your homework, to undertake due diligence in the United States, I'd say for any industry sector, and particularly ICT. All those strengths that I talked about earlier definitely come into play in ICT. It is a real driver of US economic growth, and as a byproduct, economic growth around the world. So we work with a number of companies, and we worked with one of these, although I'm not allowed to tell you which one, but it's sometimes we operate on a business confidential basis, but sometimes we get agreement from our clients to talk about them and sometimes not. But suffice it to say, companies come in all shapes and sizes. Companies that you've heard of investing multi-billion-dollar facilities, and companies you've never heard of and may never hear about investing with one person and $100,000 or $500,000 in capital. And these are all important to us. So on energy, I think I won't belabor the point, but I'll just make one little one, that the United States, from a cheap energy standpoint, and this is not just for those chemical or fertilizer manufacturers, this is important for data centers or any energy-intensive industry, from an operational cost, input cost across the board. The United States will be the world's #1 producer of gas shortly, larger than Russia. We will be also, at the same time, the world's largest producer of oil, larger than Saudi Arabia. So we will be, by far, the biggest energy producer in the world. This is good for companies, no matter what you're doing, producing or selling. This is good for consumers in the United States. This is good to in the US, the population has significant disposable income. It's from a B2C standpoint, it's a real selling point. This keeps more money in their pockets to buy whatever it is that you're selling. And things are just going to be more and more positive. You can see that it's not just about extractive resources from a oil and gas standpoint. Although you're not hearing about it as much lately, there's still significant growth in renewable energy in the US, and many companies establishing themselves or expanding around wind energy development, maybe, around solar energy component production. There's still a lot going on. So this section is all about the process, how it works. I'm going to assume that this is one of the reasons why you're here. Some of you have no idea why you're here and are just waiting for me to turn around so you can leave. I'm just kidding. That was a joke, but nobody laughed, so now I think maybe it's serious. So the US can feel a bit large and daunting, I think, to investors from around the world. A slide like this, from your perspective, doesn't really make it easier. But here's the point. There are thousands of professionals waiting to help companies invest in the United States. So at SelectUSA, I represent the National Investment Promotion Agency. And you can and should go to me if you want to or if you need to. But you don't have to. There's no right way to enter the US market. There's easy ways and there are harder ways, but if you know that you're going to Chicago or Wisconsin, and you know people in Chicago or Wisconsin, you can just go for it. But if you want an introduction to World Business Chicago, which is the regional economic development organization for Chicago, you can just go there directly as well. We're here if you need us, and we can explain the whole landscape. We can make introductions for you for any location in the United States that you're thinking about. I find it's particularly beneficial for companies to shortlist. So as you localize your business plan for the US, as you think about how you will succeed in the United States, inevitably it comes time to understanding not why to invest, but where to invest. And there will be a number of locations that have comparable qualities. So there are all kinds of attributes that you look for, energy costs being an obvious one, but wage rates, labor rates, and transportation, infrastructure, networks, all the way to financial incentives maybe. And benchmarking those, comparing those across the board is critical so that you can take steps to decide on what the next move is. There are many resources available to companies from around the world, any company, about how to invest and why to invest, of course, but also then around grant programs. So incentives come in all kinds of types: federal level, state, local, and regional. Although you may know exactly where you want to go, you want to avail yourself of all incentives possible. And we can help you to do that, and the local counterparts can help you to do that. There's a real culture of a desire for new businesses to succeed in the United States. There is this deep entrepreneurial culture, but there's also this corresponding awareness that entrepreneurs do not always succeed, but that it's okay if there's failure on the way to success. A great place to start out would be our website, of course, where we list all, well, not all, but around about 150 federal incentives. And it's a link, so you can, without even working with us, you can go directly to states and engage with them, or we can make those introductions that I mentioned. So from loans to tax credits to workforce development training to infrastructure improvements, there are all kinds of ways that our states and regions make it easier for you to invest. One of the interesting programs that we have is our Immigrant Investor Visa. This is a way for either a $500,000 investment or $1 million investment, and I won't get into the details here, but depending on conditions and the creation of 10 jobs, an investor can, after 2 years, gain a green card, which is a path to citizenship in the United States. So we have all kinds of visas for companies starting business, expanding their businesses to the United States, some for starting a business, one of which is this EB-5 Immigrant Investor Visa. It's become increasingly popular over the years. We work a lot on it. There's big discussion right now around even expanding that category of immigrant entrepreneur visa. So there's a lot going on.